Today I want to share with you mortgage loans and its types to include details about each mortgage loan and which one would be the best fit for you. Mortgage loans and its types, which are conventional, FHA, VA, USDA, and jumbo. So if you're in the market to purchase a house, you may be overwhelmed by the different types of loan programs. So in this video, we're going to break out each one step by step so you have a clear understanding and potentially know a good route for you to go. Hi, I'm Bryan Decker with eXp Realty here in Colorado Springs, Colorado. As a home buyer, first loan programs that we're going to talk about is the conventional loan. So the conventional loan works best for people with good credit, solid employment history with at least 20% down. Since these loan programs are a little bit more strict than others when it comes to credit score, you should have at least a 680 credit score if you're considering a conventional. When it comes to your employment, you need to have a solid 2 years of employment history. The conventional loans are pretty strict when it comes to this, so if that's something that you don't have, you might want to consider an FHA when it comes to the down payment, because a conventional loan with 20% down is going to be your best option because you're going to avoid the private mortgage insurance, which you would save a couple $100 a month. The conventional is typically the best loan program if you have more than 5% down. If anything below that, you might want to consider an FHA or consider a different type of loan, because the lower the down payment for you as a borrower, it might make it a little easier. The second loan we're going to talk about is a FHA. So the FHA is a great loan program with flexible credit guidelines with a minimum credit score to 620. I've even had some lenders allow a 580 credit score when it comes to a down payment. You just need to bring 3.5% to the table, which can be a gift from a family member or another eligible source. FHA is also very lenient when it comes to your income. Even if you're a seasonal employee and you don't have that 2-year track record like you need with a conventional loan, you still may need to qualify when it comes to an FHA loan. And the reason for this is because an FHA loans are designed to help applicants that normally wouldn't be able to qualify for a conventional loan, and they want to make home ownership possible for you. One thing to note is that when it comes to an FHA loan, you will be paying mortgage insurance. Mortgage insurance can be around $180 on a $250,000 loan, but it can be worth it if it's the only route you can go to get your home ownership, or apply for a loan. Most people assume that FHA is more expensive, but that's not the case for those with small down payments and lower credit scores. That's because conventional loans charge higher rates and mortgage insurance costs in that scenario. As a homeowner, it's definitely worth checking into an FHA loan and comparing situations, even if you do qualify for a conventional loan, to see where you have the best scenario and the best savings for you as a home buyer. The third loan option that we're going to talk about is called a VA loan. If you're a former military member, this is an awesome option for you to take advantage of. If you're in the market to purchase a home, the VA loan, there is no mortgage insurance, there is no down payment required for you as a borrower, or even mortgage insurance. When it comes to income for your credit score with a VA, there's also a lot of flexibility there, with minimum credit score required for a VA is usually 620, to get home ownership, and much more accessible for you. To qualify for a VA loan, you must be active military member or have served at least 2 years and been honorably discharged. VA loans are also a great option for if you meet the qualifications. The fourth loan program that we're going to talk about is what's called a USDA. The USDA loan is a government-backed loan very similar to an FHA, but the main difference is you do not have to put any money down and your mortgage insurance is less. Also, the property has to fall in an eligible area for you to qualify to get a USDA loan. So the location, a lot of times for a USDA loan, is outside the city core. So if you're looking for a house in a rural or a suburban area, definitely consider a USDA loan and check out to see if the USDA your needs to save you a lot more money compared to other loan programs. The last loan program I want to talk about is called a jumbo loan. You might consider a jumbo loan if you're going to exceed the conventional loan limits which is about $500,000. Typically this is for people in larger cities like Washington, D.C., Seattle, San Francisco, because jumbo loans are very popular because of the home prices are so high. The good news about jumbo loans is that they're widely available from your mortgage lender or your bank. You know, rates are typically or generally lower than other loan programs. The lenders offer this because banks are making their own rules when it comes to jumbo loans and they want to earn your business. You will need good credit when it comes to a jumbo loan and need around 10 to 20% down. So if you're in the market for purchasing a new home, don't think that there's only one loan program out there. It's definitely worth to check out multiple mortgage loans and the types as you're venturing, to find the best loan that fits you. I hope you enjoyed this video. Should you have any further questions about the mortgage loans and its types, reach out to me by seeing my information in the description below. And in the meantime, please make sure you hit like, share, and subscribe to my channel by clicking on the button below and ring the bell so you may receive other valuable videos like this one that you just watched. And if you'd like to see more of my content on mortgage loans and its types, then please make sure you click on the video series in your screen. Thank you for watching, and I'll see you in the next video.